Good evening. Hello, my lovely finance class. We're here, yep, Tuesday, 1st of April. Did anybody catch you today with an April Fool's trick? There were lots of nonsense things going around on WhatsApp groups and on the radio and whatever, but didn't fall for any of them. So we are here now. We're doing Learning Unit 3, starting something new. So I have uploaded some resources for you. I did it just a short while ago. Let me just go through them. As always, there's the very short summary of what Learning Unit 3 is all about. It's literally a page and a half. I have put up some revision exercises. In fact, I'll put 3 of them there. We're going to do one of them together this evening. And in front of me in plastic pockets at the moment, I've got the notes for the learning unit, and I will upload those ASAP, I think is the best way to say that. Right, so what's going on in Learning Unit 3? Okay, it's a very important one. It's to do with managing working capital. So as you remember, one of the responsibilities of the financial manager is investment decisions. So ensuring that there's enough funds on hand when needed. So then we distinguish between what do we need and how much for what in the short term, and similarly in the medium to long term. So short term is all about being able to deal with operating expenses on a day-to-day basis in the business. So it's really looking at current assets and current liabilities. So we're going to look at that. There's a little bit of accounting that you need to be on top of over here. You must be able to know from a list, not a balance sheet, from a list, if something is a current asset or not, and if something is a current liability or not. Once you can identify that, then this kind of a calculation is easy. Yeah. Then there are some other concepts in there. So if you have a look at my Learning Unit 3 overview page, you'll find it there. So we need to know, for example, what overtrading means. We're going to be having a look at some calculations. We're going to do one in a minute. And also something to do with different kinds of interest rates. So lots of recordings already in the contents folder. And then we're going to be doing some live lectures. And of course, we must be thinking forward to the next of the tasks, where you can expect quite a long, involved question in this. So I'm going to just break it down into little bite-sized chunks. We're going to deal with each part separately so that when it all comes together, you'll be able to deal with a question. So with that in mind, I'm going to share my screen and I'm going to pop up a question. Just get me sorted here. Just while we're waiting for this, I want to say here, the questions in the textbook, not very lekker, let's just say, for this particular section. Either too short or too long. So this is why I've put together what I think is an appropriate kind of a question. So let's talk first of all at the working capital. Working capital is another word for current assets. And the typical current assets are things like inventory, the bank balance or cash, and debtors. So what we're going to look at is a combination of a mini income statement and a shortened version of a bank statement. And we're going to look at the income statement profit numbers, and we're going to track it with the balance in the bank account. And based on that, we will be able to make certain comments on the liquidity position of the business and whether the business is managing its working capital well or not. Okay. So when it comes to the bank section of the statement, we obviously need to look at receipts of cash, and we need to look payments in cash. When it comes to the receipts, every question obviously is different, but there's always two regulars that are going to feature there. One will be the cash sales, and the other will be receipts from debtors. So all you'll do here is you'll read your question through and make a note of anything that is a receipt of cash, and you'll just give it a little heading. Then on the cash payment side, the two most common ones are cash purchases and payments to creditors, and then anything and everything that represents an outflow of cash. So sometimes the question can be quite straightforward. Other times we just add a little bit more complexity into it. So I'm going to break it down and just teach you one of the important things that you would prepare before you can do the relevant parts of the cash statement. So here is one of my questions. Let's get straight to what the question is actually asking. So I think that will be the first thing to look at. See over here, we need to prepare a schedule. A schedule is just a table of what? Receipts from sales. Not the brightest highlighting color, is it? Okay. So now, when it comes to sales, we need everybody to read carefully here, because sometimes you're just too hasty and you do the wrong thing. So when it comes to sales, it's all sales. So it's going to be, let's get the caps happening. Cash sales and credit. All sales, total sales. Okay. I'm going to show you how to incorporate all of it into a single table. So the first thing you do in a case like this is you put the textbook away. Textbook, not helpful. Okay. It just gives you an illustration, but it doesn't explain anything. So it doesn't explain the timing. It doesn't explain why you have the various columns that you have, and it doesn't explain the rows, and it certainly doesn't explain the calculations. So if you've done this before, maybe at school, if you look at it, you might figure out what's going on. But if you are totally new to it, like I think most people would be, textbook is not helping with explanation. Then it also says you can do a similar thing where we're going to look at payments for purchases. It's like, it's 1.5 lines in the book, but it doesn't give you an example, and it doesn't certainly explain how to do one. But then it asks you questions on them. So quite how you're supposed to do it without any help, I don't know. Somebody's got something to say? I can hear a crackling mic. Someone's mic is unmuted. Do you want to speak? No. Oh, okay. Let me just continue. Is it my mic acting up? My internet's good. Oh, okay. Right. So when it comes to a question like this, you need to just be patient with yourself, and you need to resist the urge to pick up the calculator and start finding values. You're going to leave that right until the bitter end. So the first thing you do is you read the question, you see, okay, they want me to do a table. Most important thing is the date. The 1st of July to the end of September. So that is July, August, September, 3 months. Okay. In the questions in the textbook, they are too long. They ask you to prepare these things for 6 months. In the exam and in the task, too much time allocated to it if you've got to do too many months. So we're just going to be doing the more realistic 3-month option, or possibly even 2. So what we're going to do is I'll show you the answer, and we're going to work through it. So you read the question. The very first thing that you see is you check out the time period. Then you're going to come and you're going to draw something like this. You're going to come across the top here, like that. And you're going to make a column for each of the months that the question asked you for. And those must go from left to right across the top. Okay. Then you are going to do some more things. You're going to come over here. You're going to make a column for the month. And then you're going to go down like this, vertically down. And these months you see are not the same as the ones that go horizontally across. Then we're going to do another column over here, this one, for credit sales. So let's now go back and let's look at the question. We're going to split the sales into two, and for the moment, we're going to focus on the credit sales, the debtors, in fact. So if you have a look over here, we see some information in point number 1. It says 15% of all sales are cash. So that's not what we're wanting right at the moment. What do we want? We want the equivalent for credit. So therefore, that's obviously going to be 85% will be credit sales. So that's going to be the very first thing we're going to do. We're going to calculate the credit sales for the relevant months. Now, you might notice over here, have a look there. We've got some other information here. Why? Oh, seems to want to highlight what, no, okay. No, we're not going to highlight. It's just decides by itself what it's going to highlight. We don't like that. So why have we got April and May and June when we only have to prepare for July, August, and September? Remember that these are debtors, and debtors pay over several months sometimes. So not necessarily 100% of the sale 1 month later. What happens if they spread it over what I call like installments? And this is what's going to happen here. You need to see what that is. So here, by these bullets, it tells you when we're going to be collecting the money. So for the moment, we're not going to look at the percentages. We're just going to see the first lot comes in a month later, the second lot 2 months later, the third and final lot 3 months later. So if you add the 25, the 45, and the 22, you see that it only comes to 92%. So obviously some of it has turned into bad debt because the collection period is too long. So this 8% irrecoverable, what are we going to do about it in this particular question? Nothing. Right, we are going to ignore it because this table that we are doing is looking at what? Receipts. Have we received the money from a bad debt? Nope. So it's not in here. It doesn't mean that we're going to ignore it completely. It's just that it will be written up in a different kind of a table. You do not include it in this table of the receipts. Okay, are we clear on that? So based on the delayed payment of the debtors, we obviously need to go back to before July, because in July we will still be collecting money from credit sales that were made several months ago. So my advice to you is to start with the oldest month, which in this case is April. And then you're going to come here to your table and you're going to put them in here. Right there, April, May, June, etc. When you are new to these, you might not be clear where you need to stop. So do you go to September, October? It will become clear when we do them. Yeah. So for the moment, I'm just going to end on August. Now what we're going to do is we are going to sort out the column over here with the credit sales. So what we've got here, do you notice what it says? Let's get a more visible color. This says which kind of sales? Total. Can you see there with the red blocky? Total sales. And now, if I'm only going to be dealing with the debtors, I need to find the credit portion, which is, as we said, 85% down here. So that's what I'm going to do. I'm going to take them month by month, and I'm going to find 85% of the 400. For May, 85% of the 550. For June, 80% of all these total sales. And we will continue to do that until September. So now we're going to have a look here. Notice my workings. It's all nicely color-coded. 85%, remember, 0.85 of what? The total sale for the month that we are talking about over there. And those amounts, we are just going to copy straight out from the table. I'm just doing these arrows to avoid jumping all over the place. So these amounts are straight out the table. Step 1, I must find 85% to convert it to a credit sale. Then I'm going to have the numbers that I'm looking for. And these here are the important numbers. Let me try the highlight job again and hope it doesn't go all in the wrong place. Now it doesn't want to. Why will it not? Oh, this thing is a nonsense, but it's not going to work. So we'll have to get, yeah. So these numbers here, I'll just put dots next to them. That one, and this one here, the ones in the black pen. And I'm putting the green dot next to them. Okay. Those are now the credit sales. Now we're going to think carefully. We're going to resist the urge to try to complete a month at a time. And we're now going to do a little working, which there's space for here. All right, so I'm just going to type for you here, and I'll press enter after each month so that it becomes visible for you. Okay, we'll change that to, let's go red. Right, so here, if our sale is in April, when are we going to collect? We're going to follow those 3 bullets in number 2 above. So the first payment comes in after 30 days. So that will be May. Then we're going to get the second installment in June and the last installment in July. So we're just going to go like that. Then we're going to have a sale in May, and we're going to follow the timing over there. When are we getting the first installment in? 1 month later, which would get us to June. Then the second lot, July. The final installment, August. Then we're going to come to the next month. The credit sale takes place in June. When are we going to collect? We're going to begin a month later, July, then August, and then September. You're starting to get the hang of it? Okay, let's carry on. Stop typing. We're going to do July. And when do we collect the money? Starting a month later, August, followed by September, followed by October. Next up, sale takes place in July, so August, I skipped one. August, following that same payment history, starting in September, then October, then November. Lastly, if there is a sale in September, when do we start to collect? A month later, October, followed by November, followed by December. Right, now what we're going to do is we're going to sort out what we want and what we don't want. So remember, what is of the utmost concern over here is this period here, July to September. So I'm going to come over here and we're going to see what we're going to do. Do we want, this is not going to let me do this. No, it's not going to. Oh, dear. We don't want May, and we don't want June. Do we want July? Yes. Here, we don't. I can't. Oh, this annotation is a pain in the neck. What if I try and insert some lines, maybe? No, it's not going to like that. Oh, the limitations of this compared to Blackboard. And I can't highlight in there. Once I've done one annotation, it won't let me do another one. No. All right. So all I'm going to do here is I'm only going to be having July to September. So anything which is before July, like May or June, we're going to ignore. Anything that's after September, for example, October, November, December, is not relevant for the question. Okay. So then we would cross those off if I could get the pen to do that, like I was doing with May and June. And then we are left only with the relevant months. So then, of course, we need to look at how the percentages go. So it goes as follows. It goes 25, then 45, and then 22. So that's what we are now going to do. So we're now going to try for our first month of July, and we're going to say, from the sale in April, do we receive anything in July? We do. Okay, we get the last installment, and the percentage for the last installment is 22%. So that is the only relevant one. So come here and have a look. Get a contrast color. You see there, I've got 22%. 22% of how much? The credit sale for April. That's the last installment. That's why August, it's blank. September is blank. Then I come to May. Most importantly, I've got the credit sale of the 467,500. So you notice here, I'm finding a different percentage of the credit sale every month. And now let's get the timing sorted. Sale is May. When's the first receipt? June. We don't want June, but we do want July and August. So that's why the correct percentage will be 45% for July, because it's 60 days, 22% for August, 90 days. That's the last one, so no more receipt. Okay. Then we're going to continue like this, but I just want to point out here something very important. Have a look here. With this first one, in the first installment there, the 25% comes in within 30 days of the sale. But notice what we get here, an early settlement discount. So to encourage your debtors to pay soon rather than later, we can incentivize them with a discount of, in this case, 5.25%. So the important thing here is we need to know when to include this and how much to include. So we mustn't work out 5.25% of the amount. If you do that, all you've done is you've worked out the discount for me. The discount, we don't collect. So what I do want to show is the receipt. So the receipt then, with 5.25% knocked off, will actually be 94.75%. That's the amount that we need to put in. So we must subtract the discount. But the discount is only applicable on the first installment. And the first installment is what percent? 25%. And it doesn't apply to any others. So have a look here. The sale is made. Look where we are here. I'm just going to put a star there. We're doing June. So in June, the credit sale is the 527,000. Our first installment is 25%, 0.25. Then we are allowing 5.25% discount. So we're only receiving 94.75%, which we put as a decimal. Remember to decimalize it. So you're going to multiply by 0.9475. That's where we get this amount here. What then about the other amounts? No discount here. The second installment is the 45%. The third installment, the remaining 22. Right, now we're going to go on to July. Step 1, calculate the credit sale. Then get the timing sorted. Once you've got the timing of the months, get the percentages sorted. So July, the sale happens. 1 month later in August, we're going to collect that first installment of 25% of the credit sale. Remember the discount. So multiply by 0.9475. Then, a second month later, we're going to receive the 45%. What do we do now with that last 22%? We don't put it in because the question has asked us to stop at September. All right, so that's why we stop at our final installment. And then lastly, August, step 1, find the credit sale. In other words, the 85% of the total sale. Next thing, get your timing sorted out. Okay. The first installment comes in a month later, so that puts me in September. So that gives me 25% of the credit sale. But here, don't forget the discount. Now, we're almost done. We are now going to say that's all of the money that is coming in from the debtors. So notice over here, I've got myself a heading, receipts from debtors, and I'm now going to go month by month, and I'm going to add vertically downwards. So let's just explain for July. 74,800 plus 210,375 plus 124,833. Add all of that, so I get the 410. Likewise for August, I'm going to add those 3 amounts, and it's going to give me 456. September, I'm going to add the 3 receipts, gives me 475. But remember now that each of those totals is having a little bit received from a sale in this month, another bit received from a sale in another month, etc. So now I've made more sense of it. I now have the total receipt in each of the months, irrespective of the sale month. Now, because my question said, let's go back to it, receipts from what? Sales. I've done half of it. I've done the credit. I still need to sort out the cash. Right, so what do? This part's easy. We come at the top. Number 1 says 15% of sales is cash. And when do we collect the money from a cash sale? The sale happens in July. We get paid in July. The sale happens in August. Money comes in August, etc. So the cash sale is very easy. It's just going to be the 15% of July received in July. 15% of August received August. September, 15% of that amount received September. So let me show you here. Tired of that color. There's not a nice choice at all. So the next thing we're going to do, see here, cash sales. Notice always 15%, 15%, 15%. And what are the values over here? The total sale for the month. Now we've got it. Last line down the bottom here, total. All I'm going to do, month by month, I'm going to add receipts from debtors and cash sales together, and that's going to give me the total. And there we have it. This is how you do a question where we're looking at receipts from sales. So, any questions? I know you would obviously want to try it again and listen to the recording and take time to digest it all. But I think you needed to have an explanation so that you don't waste unnecessary time trying to work out what's what. Then you might want to ask, what's coming next? So we're going to do, not tonight, we're going to do a similar thing here, where it's going to be a schedule again, but this time it's going to be of payments for purchases. And purchases obviously means that there's going to be cash and credit. So what we're going to do is a similar table to this. And let me just explain what the adjustments are going to be. Okay. We'll still have month, but in place of credit sale, we're going to write credit purchase. We will do the columns for whatever month the question asks us. Yeah. We then are going to look to see what percentage of the purchases is cash or credit. And to begin with, we're just going to work with the credit portion. And we're going to calculate credit purchases. Then we're going to look at the month allocations. So like we did here, we're going to say, our business made a purchase in this month. We will then come here to this section over here, but instead of this giving us information on sales, it will now be the payment history undertaken by the business. So it will say, for example, 35% is paid a month after the purchase. 60% is paid the second month after the purchase. So you are going to come and you're going to prepare yourself something like this, where you're going to have the month of purchase and then the month of payment. We're going to isolate the months that are relevant. We're going to then populate the table with the correct percentages, total for the credit purchases. Then the balance will be the cash. Add the two together, off you go. So I've got another question for you on this. I've uploaded it already. Okay. This one is going to be revision exercise number 3. So I would like you by yourself to give that one a go. So take this one, get the feel of it, try it again without the answer. The question by itself is already there in the revision exercises, so you can try it. You can then see how you go with the purchases one. Then we're going to do a different kind of a question where we're going to work with these totals. But I wanted us to get this understood first. So next week, most likely, we will do one where we're going to work out the cash balance. I've got a nice simple question for you there. And then we can also have a look at the working capital. I know I have recordings on that. That is a whole lot easier. That's just, can you distinguish current assets, current liabilities, and then can you add them? Okay, that is quite easy. So if you would like, you could also go before next time and you could do a over here, you could do just typing revision exercise 4, and that one is on working capital. So it's just adding up current assets, current liabilities. I'm also just thinking there's a question in the book that you can do. Question 3.8. That would also help you with your working capital. Then I think we are pretty much done with this section. Just a short other little section. Let me just type it up here. It is effective annual interest rates. So for anybody who would like to work ahead, I will put up some notes. So with an effective annual rate, we just basically ask ourselves one thing. You know that interest rates are percentages paid on a per annum basis. If it is compounded annually, it is an effective annual rate. If it's not, if, for example, the interest is compounded weekly, monthly, quarterly, etc., then it's not an effective annual rate, and therefore there's going to have to be a formula here that you're going to use to actually calculate it. So how you would change a nominal interest rate into an effective annual rate. Yeah. In the task, it will be easy because you have your textbook. You're just going to use the formula and you're just going to plug in the numbers and solve. Okay. So that is not difficult. So as far as the lesson part goes this evening, this is what I wanted to do with you. I wanted to point out the work that you can do now that there's a bit of a lull with the assignments and submissions and things like that. Right, so let me now go back to where I wanted to be. Why did it not put me there? Oh, this thing does a different thing all the time. Maybe we need to do that. I don't want to save changes. Oh, here I am. I'm back now in the Teams situation. Oh, good. Look at the attendance. Well done. We've got 13 people who've popped in. Sorry, I didn't see you as you were joining because I only have the single screen. Right, so any comments, any questions, complaints, anything that you'd like to say about that particular question? Keenan, anything? I'm not sure if I saw a thumbs up or a raise hand. Oh, it's good. Okay. Anybody else? Goodness, Kev, Marnie, Matthew?
All good. Quite easy, actually.
Okay. So I think it's just a matter of practice.
That photo issue.
Sorry?
It's concerning how easy it is, ma'am, by the way.
Oh, it is. It's really easy. But if you are using the textbook and you're sitting there in the dead of night by yourself and you're trying to puzzle through it, you're not going to win with it. But I've tried lots and lots of different ways on teaching students because the people on campus, I don't know what happens there. They just do not get this. And I've actually torn my hair out. I'm surprised I got any hair left. It's long and I still got it. But I've tried everything. That's why I've come up with that designing of the table and the planning of the months and all of the prep work first. And it is easy. If something is easy, grab it. It's easy. You're going to get 100% for it. Yeah. But I think we just needed to do a question. And then I can give you some more to practice and you will agree that you are going to love it. Anybody else? Any comments? I will, of course, share the recording and I will put up those notes that I said I've got. And then it just remains for me to find enough hours in the day to be able to mark your tasks. And then just keep on going. There's an ICE task 3, right? The date has already gone. So that's the next one that should be on your horizon. I think for this week, leave the ICE task, number 3, because it could be a bit too much going on. Let me rather next week get you a bit more prepared for that. And just a reminder, some people still are a bit out of the loop here. The dates on the ICE tasks are just recommendations as to when you must submit them. So it kind of keeps you busy so that you don't fall too far behind. And the way that we have to set them up on the system is you have to give a date. If you don't put a date, it won't let you create the thing. So that's why those dates are there. So if you've missed them, it matters not. Just go ahead and get them in. The only date you have to be careful of is the final cutoff date, which we do not know at this stage. But I'm guessing that it will be mid-May. So we still got like a good 6 weeks. Right, so that's it. I'm glad you thought this was nice and easy. Right, so
You're
if there
explaining
are,
quite well, Miss. I could understand as you're explaining.
yes, that's marvelous. Excellent, Victor. Sorry about the annotation mishaps here, but Adobe is a little bit limited. And I've figured that once you've like occupied some space with the annotation, it won't allow you to put something else near it. And then it highlights whatever it feels like highlighting, but it's better than nothing. Let's put it that way. So long as you could follow. The point is, if you can see and match what you're looking at with the words, then it's much more manageable. Right, any last round comments before we stop with the recording? If anybody wants to stick around, we can have a bit of a chat afterwards. You can ask some questions. Okay, but I think for now, let me end the recording. So yeah, thanks guys. Thank you very much for participating. I'll end recording share as soon as possible. So until next week, bye-bye.
Thank you.
Thank
Right,
you.
so that-
Good